Hope you're feeling slightly better. No, worse. And now I have a fever, which is awesome. Jimmy gonna give us a dip or what? What are you're like an hour, 2 hours this morning. What were you doing? Fuck was this? It's really like 32.50, but yeah, it'd be cool. Being up all night watching AI videos of yourself as Christopher Walken doesn't help. I didn't watch it. I've seen it before. I just woke everybody else up to watch it. It's a rounded bottom breakout. Oh, Jesus. Andrew left. Tell him not to leave. We've just started. I love it when institutional short positions immediately backtrack all their statements. Or they'll like underplay the size of their position. Citron this morning. They'll be like, well, we didn't short it that hard. Nothing like ething your own words. Yeah. My end phase 130 weeklies might have printed 400%. Nice. When they say germ free, they mean it. I didn't believe the hype, but my doctor told me he'd never seen anything like it. My body was devoid of germs. What about the ones that you need to live? That sounds like a horror movie. More upside likely on SPX? Could retest 5450. How big is the risk on getting exercised when going synthetic long GME? What should I look out for? You mean like getting assigned on the put? Well, that can happen if you have a sold put that's in the money. Need probiotic, yeah. I had a lot of pain and diarrhea as my body readjusted to its healthy state. That's not good, man. You need to go like roll around in a daycare or something. Find like a McDonald's ball pit if those still exist. Used cars killed inflation. Nowhere am I able to find Citron Research's assets under management. Citron Capital. They have $21 million. What a fucking joke. What a poor. Can you speak on why they would have moved the CPI goalposts from 0.2 to 0.3? What do you mean? 0.3 would have marked another leg higher for year over year. So it would have moved up to like 3.6% annualized. Jimmy looking like it's going back to 80 today. I mean, it's looking like it might test 35. They have $21 million, Gherk. Am I the hedge fund now? I mean, they're just like everyone talks about them, but they're just like some shitty Twitter hedge fund. Who gives a fuck about them? You notice guys like fucking Kenny don't come out and say stupid shit like that. You don't see Jeff Yass on Twitter telling people what he's shorting. SS needs to have a bad guy, apparently. Andrew left and Anthony Chikamba are Titans of Wall Street. I'm so glad I forgot to cancel my subscription offering on BNet after I sold all my shares during the run. Instantly sold all my subscription rights when BNet unhalted today. Oh, nice. Cool. In today's economy, 21 million would let you leverage 50 billions worth of US dollars. Mm, fair. I don't see how the market perceives that as good news, neutral at best. It has nothing to do with how the market perceives it, right? Yields are down, leverage is up. It's clearly just an effect of other seasonal adjustments, right? I mean, it has literally nothing to do with the actual rate of inflation. I'm doing all right. Thanks for asking. I'm sick. I think we're stagnant here until FOMC. Was the pump in line with expectations? Even though the MM's only expected 0.7%. Well, I said I said last night that the bulls were going to target 44.50, and that still looks like the kind of the top of their positioning. Some of the in the money positioning broke down. I mean, obviously there's some profit taking after 100 BPS move, right? I mean, this could break down more, right? It's clearly failed the high. I don't know if we're gonna like fill the gap or anything like that before FOMC, but we could come down a little. That's not how that works. Thanks, Wi-Fi. I'm up 100 million bips on my GME 125Cs. Now what? Well, I assume that you're gonna hold them until they're worthless. Do you need my blood thinning mat? Maybe. You sound terrible and you still showed up. There's no days off. So when interest rates go down, bonds go up, like they're an AI stock. Yeah. One more tardy this quarter, and that's a week of detention. I feel like that's completely unenforceable. If we hit 35 on GME, is it a clear shot to 40? Well, things kind of accelerate the higher we go. Does SPX have a VWAP? It technically doesn't have volume, but ES does. So you could look at, I mean, I would look at ES like that, which is around 54.30. 5430 ES would be around 5420 SPX. We're getting pretty close to the expiration, so spread's getting tighter. A little bounce here, I think. GME's starting to push 33. Remember, there's resistance before every major level on GME. So like 34, 34.50, and then like 39, 39.50. Because people don't like to buy those calls. It's a common like psychological thing you see in options chains. It's stupid, but it's real. How far are we from halting? I don't think we're going up fast enough to halt. Remember, halts become less and less frequent the more price goes up. I have an interview tomorrow at market 9 a.m. It would be interesting carrying the calls through that and ignoring my phone. Just don't ignore your phone. Throw it out on the table. Be like, I'm in the middle of a high stakes trade, so don't waste my fucking time. Well, my nose is too clogged to get the allergy medication into it, which is problematic. Like, I can spray it up there, it just comes right back out. Try flip. What do you think? I'm not trying these things? Use your prison nose. Let me turn 5K into 500K. I'll forgive you. You could have bought the 44 or 44.40 yesterday at market close for today, the 0 DTE. That would have worked. Why didn't you do that? You suck. No wonder she left you. Have you tried vaping but blowing out of your nose? I can't. Nothing will go through there. It's closed up. Have SLR hit your price target finally? Any updates there? I might exercise my 200s and then just sell some $300 cover calls. It can keep going. I mean, there's still some out of the money interest at like 310, 320. And I have till September. It's gonna just, I guess I can just sit on them, but looks like 300 is still a bit of a resistance. I broke earlier, but let me see if anything else is building on the chain. It took a while for Gamma Max to push up. Gamma Max is at like 296. God damn. Yeah, there's still some like 310, 320 calls. There's even some calls coming in out at like 340, 350, 360. I hate you so much. I know you do. You need some A plus South Appalachia. Who is that fucking congressman? The guy from the one mountain in Ohio. What was his name? I can't remember. I do say Appalachia. I think I found where the inflation is. Have you seen the stock market? They've just squirreled it away with seasonal adjustments. J-Pow's get caught on stage today like he won the war. Consider your accuracy on the RC dilution sell price. Is he going to do it again? He should. The honest answer. Well, we're going to see shorting leading up to and after the investor call tomorrow. It's possible. Although, price could easily run away today. I mean, I know it seems crazy, but GME options are still a little bit underpriced. Did the Buckleys help? What does its appearance remind you of? I have no idea, but no, it didn't do much. It tasted like shit, so thanks. It was really minty for a while. Lace is out. Welcome to Pigeon Whale. I should say welcome back. Oh, god damn it. Hold on. I got a fucking stupid speaker. Why does it keep doing that? There we go. Business. I don't know who these people are. Unbeknownst to me, my dad bought like 800 shares of GME in the 20s and was flexing how much premium he's made off covered calls in the last 2 weeks. Ballin'. Don't tell your dad about naked calls. How do I get in the Discord? Click the link. Any news on the OPEC referral Rex codes hypothesis or GME? I already went over that. Why would there be news? It doesn't change. How much money would you have to have in a trading account to quit a stressful job that pays 150K? I don't know. How good at trading are you? Aleve D is amazing when I'm sick. The pseudoephedrine makes everything. They won't sell it to me. I tried to buy the fucking liquid decongestant last night, and they were like, "You've used your license to buy too much Sudafed." So now I gotta have a friend go buy me some, like a fucking like a meth manufacturer. please unban me on the Discord? Why are you banned? Pay a homeless guy? You gotta find a homeless guy with a driver's license. No, if you buy it twice in a month, fucked. And so like the reason they're blocking me is because I bought the Allegra D with the pseudoephedrine in it. And then when I got sick, I bought a pack of Sudafed, and now they won't let me buy any fucking more Sudafed. They're like, you need to wait 30 days. Oh, well, I'm not going to be sick in 30 days. So I guess I'll just take extra Allegra with pseudoephedrine in it. Calm down there, Walter White. Bro got a PDT in real life. Let's be honest, you'll be sick in 30 days. I've been doing really well, all right? I live in a filthy city. Yeah, I can call my doctor. They can prescribe it. That's like a pain in the ass. Are you sure it wasn't more than two? Yeah. It was the only two I bought. Why are you such a delicate flower? This goes with the territory. I don't like going to urgent care clinics. They're dirty. My house is full of air purifiers. Do a teledoc? I can't because I don't remember the password for the thing. And then it was like on my old phone. And so I don't have like the appropriate 2FA to reset the password, and I'm not calling them. No. The last time I called them, I was on the phone for 4 hours and accomplished nothing. Yeah, I know about BIG, but the company's garbage. They're pulling a BBBY, they spent a bunch of debt buying back shares so their insiders could sell the fuck out. Have you ever been in a Big Lots? Why would you go long on something that shitty? Monitored your symptoms over the past week, and I think you may have a banshee in your basement. Check it out. I live in an apartment building. I don't think I mean, we do have a base on it, but it's the woman who screams at the laundry machines is not a banshee. Have you been inside a GameStop? Oh God, no. Not since like 2021. Well, I can't rewind time and play in the dirt as a child. It's not gonna do anything though. That's just I'm just gonna get sick more. SCX Head and Shoulders, Finna Rug Jimmy. What Head and Shoulders? Are you talking about this? Oh, it's so sloppy though. Maybe it looks better on the 15-minute. No. 5? Still doesn't really look like a Head and Shoulders. Yeah. It's like slightly bearish consolidation. Just barely. Also, I think puts are just too expensive. Yeah. What the fuck is that? A $16 at the money put? We need more pumpies. What's Jamie doing? Trying to short it? Gonna have to wait for the foreign exchange to close so arbitrage can get weird again. Was CPI really that bullish? Mm. It was 0. It was like 0.01, but still. An 80 bip pullback before FOMC would be cool. I feel like that's kind of ridiculous. Hmm. Why is charm negative here? What the fuck is going on? Huh. You guys notice that like VIX is suspiciously high? Our move up. They boofed more than just the print. I mean, VIX is fucking the same as it was at when we were at 5,300. Very odd. $45-day returns, about 200%. Joey Chestnut was banned from the hot dog eating competition this year, and I'm enraged. He took a sponsorship deal with a plant-based hot dog company. What the fuck do you expect? It's so dumb that SS was such a pain when you were trying to teach them about options. And they basically had their pitchforks calling it evil. And see if you lit the dynamite with the options play and no DRS. Yeah, I know. Well, at least finally they listened to someone. Sort of. They still think DRS is the way, though. There's like a bunch of them that are like, wait, guys, but we were DRSing. I just woke up a bit ago. Why are we here? There is no inflation. I'm gonna laugh my ass off if the June print's negative, though. I told them when they all started fucking DRSing that Cohen was gonna keep diluting the float. Imagine spending just 2 years of your life just talking about fucking DRS every day. I don't know about you, but I DRS my shares. What a douchebag. I mean, imagine the kind of fucking cunt you have to be to just spend all that energy only to just get blown out in 2 days. Pots don't get tired, Gherk. I said it before and I'll say it again. The only people that benefit from DRS are institutional finance. And computer share, yeah. When selling CCs on GME, how do you determine the best strike and expiry? Well, I used to just sell them at whatever strike the market maker would give me a fill at the mid, in the money, and then with sufficient time for volatility to mean revert. Recession, stagflation, all canceled. Jan 2021. Here we go. In 2 years, boom, we locked 75 million of the float. Fuck you, hedgies. In 2 days, RC dilutes 75 million shares. Guess who's buying these overpriced options? Surely not somebody who knows that they're overpriced. Right, Nuke? All right. I don't believe you. Huh. Doesn't look right at all. Momentum's still doing a thing. Are we getting any fucking options anywhere? We're just sitting here. Should I be buying these underpriced GME options? Well, if you think they're going to be priced up. $54.50? Huh. Beyond's not on reg show. You're getting some in the money call support coming in at 20, 25, 30. But we could fall to 25, which is like a $10 move. Probably not worth playing though. Back to VWAP. However priced are these? Jesus fucking Christ. Fuck that. These are healthy, steady pullbacks for GME. Yeah, we're not losing a lot of ground on them. I mean, this is pretty solid, right? They could get ugly, but we have support. We have pretty durable support through most of this range. Yeah, solid, but win afterburners. I don't know. Maybe once the London exchange closes. Liquidity is starting to get tighter. We're getting a little bit more covering right now. We have resistance at 34, and 35's really important, so we might see short vol try to defend it. We haven't really gotten to test it yet, but we're getting closer. P.S. I miss you. Why'd you leave? Was it because I wouldn't talk about MMTLP? See if you literally had to post a meme on Twitter for them to realize it's all about options and vol? He had to make a post because clearly they did not catch the memo from his $12 million call position. Huh. Huh. I'm alright, Josh. Thanks, though. There's nothing that tight, Grim, too. Was underpriced GME options mean we shouldn't be selling them either? It's risky to sell them. You missed a Ko-Fi. Oh, shit. Oh, what's up, BMG? I know GME is the topic of the day. Take a look at RNA. It's interesting. Sure, why not? No, my favorite biotech stocks. I don't really think it's that interesting. It's just It's just like a biotech stock that had good data news from trials. Like, Ko-Fi didn't even pop up on screen. Yeah, it was weird, huh? I should try refreshing it. Yeah, that should fix it. What group of GME options are underpriced right now? The ones out of the money? Do you think GME is going to break 35 today? I think we're pretty close, right? I rejected it. Oh, I see. Check the options chain. There's just a bunch of sold calls that got squeezed. I probably don't even have options data for this. No. It's fucking like barely anything on its options chain. Some insider leaking clinical trial data to hedge funds. That's nothing new. When selling CCs, you usually pick the mid price to sell at. Not always. I mean, sometimes you can't. Depends on how much liquidity is on the strike. I mean, it can be hard to get a fill if they're in the money at mid. You might have to wait a while, but if you can sell them on the upside, you tend to get better fills than if price is falling. Would a lower low here help cement that this is bearish consolidation? I mean, it's... No. It would just break down, right? Higher lows until you got a breakdown. The next lower low would be like where it should break down. But there's support at 50, like 54.25, so it's probably not going to break down a lot. And the calls are overpriced. Yeah, the medical care services being down was a bit of a surprise. I have to look over the entirety of the report to see what else they seasonally adjusted. But right now it looks like PCE didn't really change very much at all, right? And they've just adjusted down headline based on like used car prices, a fucking minute drop in food costs, and a slightly lower transportation costs. What's wrong with selling closer to the bid? I mean, sometimes the spreads are pretty wide. Do you ever sell a CC and use the premium to buy a call as a hedge? Is that a god strat? Usually I'll only buy a call hedge if my CC is breached after the point I sell it, right? But that's pretty rare. I mean, generally I'll just get more time on it. Would you buy BNED when it's back below $1 again? If it goes back below $1, absolutely. I don't think it's gonna drop that low, but I'm thinking I can get it maybe at like 4. I didn't promise GME was gonna go to 50. It has to break 35 to do anything even remotely exciting. I can show everyone how to build a guillotine if they bring me Yellen. Nice, Daniel. I already said J-Pow's gonna come out to the podium like he just won the war on inflation. Are all our problems gone? Win dovish rate hike. Is there a safety zone on GME to grab CSPs with good chance of avoiding assignment? Not now, no. I couldn't think of a worse strategy right now than selling CSPs. Do you want to buy GameStop at $32? Superstock doesn't understand how options work. They're also willing to buy GME at literally any price. Um, Prices are inflated 34%, 40% on the things that people actually buy and need. The average person is lost once again. Yeah. What's up, Richie? Nice. Thanks, little orphan Danny. I don't want to buy GME at all. I just want to profit from the volatility with mitigated risk. You can sell spreads. I mean, I feel like betting that GME is gonna stay above any price until Friday is a risky proposition. I don't play things that are biotech or pharma. Chance of another Freg's Day? Sure. Kramer on Squawk on the Street saying Jimmy and Cohen has beaten the Bears. No more gay bears. That can't be true. Yeah, but you gotta have something better to talk to me about. Thoughts on Cat? Ugh, it fucking failed its uptrend like a while back. I'm not particularly bullish on it right now. About 621 beyond calls for some GME exposure. That sounds stupid. What's Freg's Day? The day the November 2021 run got yoinked. I still have FSLR calls, Carl. God no, Freg's Day. The little bounce on SEX is failing. Yeah, we might pull back to support. I'm having a hard time explaining this, but 0 DTE charm is somehow negative. Not kidding. There's so many fucking options at the 4450 strike that they're decaying. The delta decay on them is pushing prices down. What was the mechanism that yoinked it? The market maker hedge got blown out. They didn't need to. They just dumped all their delta all over everybody. If GPOW is full cuck, when are we going to 5,500? It's gonna be hard to move up much higher than where we're at now. Those short calls need to squeeze off between 5,300 and 5,400. But I didn't buy any puts today. I went I, I went short ES. I closed the call side of my straddle, which I'll probably regret after the FOMC meeting, but JPOW's today. I'm not short GME. What are you talking about? Are you just saying things? You're doing that thing where you say things? That's kind of what I meant. If JPOW cocks, do the short calls likely squeeze? Maybe. They do have a lot of theta. You're culturally appropriating TV from the 1950s. I'm in black and white because I am sick. This is how it goes. When I'm sick, monochrome. Yeah. Goofy out of borrowable shares again on iBorrow. Borrow cost 167. Maybe we should just pick up shares to the lending premium. It's not bad, actually. Dovish hikes only. It's okay to be goth. Jamie is gonna buy Hot Topic. What's Carvana do with CPI? Interestingly, the drop in used car prices cannot be good for them, right? Like up today, but that's not good news because people just because used car prices are dropping doesn't mean people are gonna buy them. Hawkish cut. Yeah, but then if inflation's hot in June, US debt will get downgraded. They can't risk cuts, I don't think. Carvana's still offering me 10% more than the next guy for my car. You can sell it on Craigslist for 30% more. I've been shopping for used cars, and I can tell you with the utmost certainty they are not decreasing in price. That could be regional though. Hmm. Ooh, that's the good stuff. Hawkish cut makes me laugh so hard. It's pretty funny. Some of Jan 25 GME 15 covered calls trapped underwater. For the last run up, I rolled out for a nice credit. At this point, just let time do its thing and look for a breakdown in price before closing? Or can everyone stop asking me to advise them on their GME positions? I'm not going to. I've noticed a trend of this lately. Stop it. I've gotten like 30 DMs over the past couple of days, and you know who you are. People are like, hey man, I'm doing this with GME. I don't care. If you want direct portfolio advice, I'm more than willing to raise the price of Dillionaire. That was mean. It's not mean. I can't advise everybody on their fucking positions that they've already entered. $54.34 in my checking account. Should I buy one GME and a 4-pack? I might want to save that money for an emergency, Alan. Why would our debt get downgraded if they cut rates and inflation goes back up? It would mean that the Fed has lost control of inflation and that they're willing to accept higher inflation for longer, which means the payments on our debt are going to persist at their currently insanely high rate. Bond values would drop precipitously, as would faith in the US debt. Just trade my port. I know you want more 1 minute to expiry SPX calls. Hey, don't shit on 1 minute to expiry SPX calls, all right? And sometimes that's good money. No advice juice needed. Just the next 10x play. I'm not saying it to be mean, but I mean, I feel like a lot of people take positions without thinking about them first. And then I can't fix that, right? Like, I can't fix the shitty position you're in. And GME is a shit show. There's a pretty solid argument that there are no good plays to be made on GME, short of selling tons of volatility and waiting. It's not a casino. I mean, if you treat it like a casino, your returns will reflect returns similar to that of a casino. That's my issue. Hmm. Interesting. Tis the 12th. Tis 13th. Huh. Interesting. Honestly, not surprised with GME. Ain't no way they're letting DFV exercise his calls. Uh, I mean, but they probably couldn't stop him. He could still just sell like 2/3 of them at a profit and exercise the rest, right? Yeah, they're still selling a lot of volatility. They will never stop, okay? There will be no stopping of the volatility selling on GME until volatility goes down. Thanks, Claw Range. I haven't been getting a lot of sun. But reversals tend to be fast and have large volume. These aren't consolidation at all. Consolidation is generally like narrower and narrower price ranges on descending volume, right? Earlier you're saying GME calls are underpriced. Yeah. Now you're saying they'll sell IV until IV is gone. Those two things don't seem to agree. One actually causes the other. The reason the options are underpriced is because they are oversold. Perfectly balanced. They're not going to cut rates today. Not unless they're fucking insane. There are treatments for these days. Same reason why you can get cheap puts so often on SPX when Todd's going ham. Yeah. Yeah. Well, that's the reason overnight straddles are underpriced also. That's why they're such an effective strategy. The risk premium for today is nuts. Well, the add the money options are massively overpriced for SPX. Strangle gonna work out? It's also overpriced. Also, there's no volatility. Why would you want to strangle? Nope, didn't see that. Well, we'll see 5,500 before the month is out. If JPA's tone is mega dovish, we could, yeah. Well, the in the money calls need to squeeze off. But those are pretty far dated, which means that whoever sold them, like their thesis over the next like 6 months will have to be changed by whatever happens today. Traders price in 2 cuts for 2024. Fed Fund Futures is pricing in 0.4 right now, which is not quite 2 cuts. I know you said there isn't a good play on Jimmy right now, but what about what you said on the weekend stream where you said it's better for retail to buy in the money calls on Jimmy like DFE instead of YOLOs out of the money? Yeah, because of charm. So when retail buys like lots of out of the money weeklies, right? Initially, at the beginning of the week when they start buying them, it's very beneficial to price improvement. But as we get past the midpoint in the week, those out of the money positions start to lose delta and if they start to lose delta at a rate faster than they're picking it up, right? So if we trade sideways, they eventually have a negative effect on the price of the underlying because the market maker will start dumping the delta that they picked up in the first part of the week into the back half of the week. So if you're in the money, your charm decay is positive, which means that the market maker is consistently buying more shares into expiration as your delta approaches 1. So like out of the money call, right? Delta goes from like 0.4 down to 0, right? In the money call, delta can go from like 0.6 up to 1. Did someone knock? Oh, 1 second. That was nice. My neighbor made food. I want to eat it. Anyway. It's a whole lot of work to push against index pressure on GME, right? It depends. The IV on GME, depending on the amount of Vega exposure on the chain, can kind of start to separate it from any correlation with indexes, right? You about to get roofied? Maybe. Hmm. Getting roofied right now sounds kind of nice. Probably way more effective than NyQuil. What did she make? Toast, sausage, and an egg. She made that for you? I don't know. I assume she made herself breakfast also. The cat lady? Yeah. How's the cat? Still under the couch. Do you give her stock tips? No. Did you ever give your cat a real name? No. Doesn't seem necessary. Is she hot? Objectively. Does your cat love you? Probably not. I still have I have two sets of Roombas now. What became of her lady friend? It's clingy. Who's more easy on the eyes, your neighbor or Janet Yellen? Um, Mathematically, Janet Yellen. She's a perfect sphere, which is the easiest shape on the eyes. Violet Beauregard. Janet Yellen always reminded me of a white M&M. It's funny you say that. Clingy always happens. I know. That's what you have to get out when it starts. Hash browns, how do you make them at home but get that golden brown crisp? This is going to sound complex, but you take potatoes, shred them, put oil in a hot pan, put the potatoes in the pan, wait, then flip them over, wait again, boom. Who the fuck is Kay Harris? Dude, they get soggy. You didn't wait long enough. Kamala? Vice President. Oh! I know who you're talking about. What about her? Her or Janet Yellen? For what? Treasury? Banging? The decision's at 2 o'clock and then the presser's at 2:30. How's breakfast? It was pretty good. You see oil getting shorted more to impact the next CPI? It's not working. Are you searching SPX de-risking if the what does what it always does? Oh, the Fed? Maybe. I mean, I don't think anything's changing, right? Like, just because we got one we're gonna need three to 4 months of declining CPI before the Fed does anything relevant. If they cut before then, they're taking a huge risk. Roberto, thank you so much, man. Welcome to Cornichon, guys. Give Roberto a shout out for hooking you up. Does it cut mean an SPX crash? Not necessarily. Emergency rate cuts generally do. Our hand may eventually be forced by Europe cutting rates and the impact to the dollar. I don't know about that. Europe cutting rates is good for a stronger dollar, right? It also allows us to export more of our inflation to them. CNS has been wonderful lately. It's really been working overtime. Also, win rate cut. I mean, I kind of want them to do it, right? Because then they'll fuck everything up. I just don't think they will. What happened to GME? It's sitting at $30. Ideally, a higher low on the day. What does a test of 25 look like a mountain away? I don't think a test of 25 is unreasonable here. I think the better question is, with options prices what they are, why the fuck are you trying to play it? I think Gherkin has become a bear of some sort now. I'm actually pretty indifferent right now, at least positionally. It looks like we're just stalling until FOMC. Yeah, for the most part we are. We still have like a $25 range we can swing in, though. The word you're looking for is apathetic. It's where I've been with GME for 2 years. What percentage of your long-term port is long versus cash equivalent? Oh, like 12%, I think, roughly. Everything like it's basically like 88% cash equivalent. I have a lot of treasuries. I'm my own money market at this point. How are your calls looking, Green? Yours? Oh, that's right. Oh, my EPAM calls are still in the shit. But yeah, it did have a nice move today. That's my Putin gives up hedge. Weren't you originally going to sell the weeklies yesterday? Unless we closed over 30, which we did. Oh, silly consolidation. What are you doing? Holy fuck, this is boring. Break up. FSLR could get down to like 320 in the short term. There's call positioning still at 310 and 320. I don't know. We haven't really done leverage analysis on QQQ. But like 60% of its valuation is like 3 stocks. So it's a bit over concentrated. Matt M, welcome to Cornishon. How's your bottom line been impacted by Russia halting trading in the US or Euro on their stock exchange? Thiers's Law says what? Sounds like they're trying to stockpile dollars and euros. Or prevent hoarding. They want everyone to go long the ruble. Gross. That's going to work out well for them. Hyperinflation 101. Well, baby steps. Do you think there will be any rate cuts this year? No. Okay, I'll restate that for you, Gav. I don't think they should cut rates this year. But they do love the Taylor rule. That's just because you're long bonds, Gav. Do you think they should increase rates? Yes. If they decide to keep the rate the same at 2 p.m., bullish. All that matters today is the SEP. No one expects them to do anything with the rates. Yes, but they won't. Well, that's because banks would fail. But banks will fail if they cut rates and our debt gets downgraded. So it's, again, the Fed's stuck. They trapped themselves. What is the Fed? It's the central bank of the US. If you were to short the SPX today, when would be a good time to do it? Not now. So say they cut 25 by Q3, like the set meeting, right? Set meeting, they do a 25 cut. December inflation spikes. Moody's will downgrade us in a fucking heartbeat. The bond market will do all the tightening that the Fed refused to do. And there's no way we don't get a spike in inflation if they cut rates, right? The wealth effect will just take over again. Andrew Left eats corn dogs for the shape, not for the taste. Okay, I found out that Citron has $21 million in AUM, and I no longer care about anything to do with them. There's like Twitter influencers with more money. How do I read about summary of economic projections? $21 million? Like in total? Yeah. Like an intern. I hope this failed bounce takes us to the promised land of 25. 25 is just support, though. That's like one account at most funds. Crazy. Yeah, just big mouth. Big mouth, small stick. More hilarious, minimum investment for Citron, 10 million. They have 2 clients. Or they had 4 clients and they lost 50% of their money. No one's giving a first year $20 million. They don't let you lose it all. Who's more annoying, Andrew Left or Dave Portnoy? I don't know anything about either one of them, honestly. Me? I'm more annoying? Yes, you are. Interesting. So Russia's given up on the ruble. Huh. Putin's going to try to keep all the land he took, isn't he? It's because they left the aliens at Chernobyl. They had to get them back. Duh. Why do I think you mean 5335 and not 5435? I mean 5435. Yeah, Carl's still alive. He's straight edge now. What time is FOMC? Well, the decision is at 2. The presser is at 2:30. I'm pretty sure the Treasury Department sanctions prevent Russia from buying US bonds, and they prohibit American, I think they prohibit American companies, well, any American entity from purchasing debt or equity from any Russian state-owned enterprises or privately owned enterprises. And the idea of those sanctions would be to prevent Russia from raising capital in U.S. markets. The same for Europe. So any like euro-denominated securities. Russia's state-owned enterprises, same like Russia privately owned enterprises. Yeah, there's the lines are blurred. Are you familiar with Hans Albrecht? No. No. Considering his options course, it's like a 6-week program. You don't like your money? I've never met anybody that's learned anything from a stock market course. or a trading course ever. I know a lot of people that have blown a lot of money on them. Just buy options as a strategic investment. And if you're really autistic, pick up option and volatility pricing by Nattenberg. And against the gods. Fucking risk managers. Jesus Christ. Those will be far more information dense than anything you're going to get out of any course. Gherk's course is 500 videos and 4,000 hours, and it's still going. There's no course. There should never be a course. Don't ever learn trading that way, because you will not find success. Trading is individual, and you have to tailor it to not only your own capital requirements, but you also have to tailor it to your own psychological profile, and that takes a lot of experimentation and time. Lots and lots of time. No one's gonna ever teach you to trade in 4 weeks or 6 weeks or 8 weeks or 12 weeks. No matter how much money they charge you or how much success other people have found, you will find that that is bullshit. Learn risk management, experiment, find trades that work for you. Not only do they need to work for your available capital, but they need to work for your availability. You know, some people have jobs, they have children, they have other obligations, they can't watch the market 24 hours a day, and you have to really tailor however you choose to trade around that. And you also have to tailor it around how you mentally manage risk, which is going to be different for every person. Been a decade for me, and I'm still terrible, but less terrible than I was the day before. That's why securities analysis and the intelligent investor are important. I agree. I think everybody should read those. They should be like required reading in high school. Successful trader wouldn't be going around teaching classes. There's a few that do, right? But just because they're successful traders doesn't mean they can teach other people how to trade, right? Most of them just teach a system, right? Like, if you do this repeatable thing, you will make money, which is good, and that is a lot of what trading involves, right? Is just a lot of consistent repetition, but bad because you only get one approach to trading, and that doesn't make you versatile when market dynamics change, right? So, you know, it's kind of like the statement like everybody's a genius in a bull market, but those conditions can change overnight, right? And then all of a sudden you went from being moderately successful to being absolute shit, and you don't know how to adjust because you didn't learn the basics, right? You didn't take the time to learn, market mechanics. You didn't take the time to learn options pricing. You didn't take the time to learn risk management. You don't have enough macro understanding, right? And so you're not able to adapt. And this leads to a huge portion of retail day traders just constantly taking courses that provide them less value over a 6 month period than what they paid for it, but they never actually become truly proficient. The basics, like diamond hand to expiry. Exactly. The free videos from your brokerage are better than the other ones, to be honest. Yeah. I've just been scrutinizing everything you do on the stream and trying to find out why. Has gone well so far. Nice. That would explain the wild swings on your account. GPT just generated 50 more ways of saying buy low, sell high. I'm willing to expand my full catalog of 100 courses now and sell it to you for a bargain. What book teaches you puts, same like shares, options, and volatility pricing? No, because I have like a different approach, right? So I don't sell a course, and I rarely directly advise anyone, right? Sometimes someone will present me a position and I'll kind of review it, but I'm not going to tell them what to do with their money. What I thought would be successful, and I think so far it's been more successful than anybody's courses, is you create a community, democratize risk and loss through communication, and let people learn on their own, right? That way each person can learn from other people's mistakes, right? And they can learn from talking to each other, and they can target what works for them and form that into a trading strategy or plan. Traders learn from others' mistakes. Bah, I mean, some do. So you're saying you're terrible value. You clearly didn't go long FSLR. I wouldn't be here if I hadn't learned from Farmville's mistakes. Your book should be How to Alienate People and Profit Off Idiots. I feel like that's fitting for this channel. He created a dysfunctional family where he's the grumpy dad and everyone wants to make him proud. Fever Gherk is an excellent communicator. Thank you. I learned not to DRS. Well, that's a win, right? I have no lines up here. Where are the support levels when JPOW comes out? I mean, it's all just blue sky, right? 5,500, 5475, 5,500 psychological levels are your best bet for upside targets, because there's nothing historic, right? So I mean, although my 5449 line was pretty spot on. That is now like minor resistance, right? Uh like the high for the day. So we do have that, but that's it. Is your channel continuing to grow? Yes. I mean, way more slowly than like 21, 22. What's weird is like not a lot of people from the stream are active on the Discord. And there's a lot of people that are on the Discord that are just not active. Like they don't talk to anybody. It's weird. You should, by the way, if you are on the Discord and a lurker. And I know it's not what you want to hear, but you should talk to people. Bots, bots, bots. Rutro, GME dead. I don't think so. I only talk to myself. Sometimes I get into arguments with myself and lose. I have nothing smart to say though. I mean, the value there is in being able to ask questions, talk about strategies, talk about risk management, right? Share dick pics, whatever you're into. No, don't talk to Farmville. His risk management is terrible. Guys, Gherkin is shilling discourse again. I'm posting the GME updates and the. I mean, you can always just search my screen name, right, and look for the post. But I'm posting them in the announcements channel. They're also cross-posted onto the subreddit as well, so you can get them either place. I don't think they're hard to find. Do you know anyone in Discord who has a real estate port? If they do, they don't really discuss it. Are you talking about like real estate exposure through equities or like just real estate? Brigading Reddit shill. Yeah, no problem, Danielle. Your Discord wants my phone number, and I don't give that out. It doesn't want your phone number. It's to verify that you're not a bot. And to ensure that if you're banned, you stay that way. Thanks, Teddy, but I'm okay. It doesn't matter if you take bad positions or lose money. It's still worth talking about. There's no shame. Everyone's had a bad position or a bad entry or lost money, right? But it's better to talk to people about that and be like, this is where I fucked up and have people weigh in on it, right? I mean, if your social anxiety is really that bad, I mean, you can DM me. I'm gonna judge you probably harshly, but I'll give you as much information as I can how not to repeat that mistake. People, I hate to break it to you, but people have your number whether you like it or not. Yeah, everyone thinks they're like protecting their cell phone number from something. The cell phone company sells it to people. I don't know what the fuck are you worried about. Unless you have your own network. Do you have your own 5G network? I mean, I'm long AT&T, but I'm not that long AT&T. He's using burner phones. Everyone's data's been breached. Nothing's private. Get over it. If anyone wants risk management advice, I'm available. Oh dear God. I got an email from China. Chinese one said, "Send Bitcoin. I have video of you shaming yourself." I thought, who cares? I've seen that video. You were shaming yourself pretty hard, Mikey. Has a dude ever given his number to a complete stranger in the attempts of smashing and never talked to that person again? No. If a hot girl or boy asked him for his number, he'd just be like, "I can't give that to you. It's private." Like people do. Nerd. It's been a long time since I had any exposure to GME. Just remembered it's because it always loses me money. Mm. Hope is a hell of a drug. I feel like a retest at 26 would be very healthy, but we're not going to get that, right? 29.90, 30. Boof. If you see a big drop on high volume, 1 minute candle does not imply shorting. Well, selling. Selling isn't necessarily shorting, though. DFE taking some profits? I doubt it. Although at some point he probably should test the waters to see how the market maker reacts to him moving his contracts around. Hmm. Oops. God damn it. No. Yeah. We're gonna watch the presser. But that's at 2:30. How would you distinguish between selling and shorting? Well, selling increases liquidity. Shorting decreases liquidity. The share offering? Yeah, they announced it was complete last night. Are there any bands that if a woman likes, the deal's off? I'm not listening to music with them. Why would I care? Will your new website have a liquidity chart tips? That's gonna require some time, but ideally over time, yeah, I would have some indicators for that. Still not resolving arbitrage there, right? No, let's gotta move back 2.5. Just shorting through XRT. That's curious. I haven't gone through all of the CPI report. I have to do that tonight. Could the GME dump be an indication that they finished covering obligations for this period? What do you mean dump? We're at the same fucking price we closed at last night. You mean the failure to break 35 earlier? I mean, this really isn't like a dump. We just moved back to support. UBV is still flat. Exactly. I actually think a test of 26 would be better, but I don't think we'll get it. What are the strongest supports on GMA? There's some right around here at 29. From short puts. There's short puts at 29, 30, 31. And the 50-cent strikes too. But 27.50 and 25. 25 is a major support. But 30 is a big resistance. It's not uncommon for us to trade through it and then retest it. But breaking out like this, and pulling back and retesting a slightly higher low, that's good. That's like healthy price improvement, right? Sets us up to potentially move higher. Is there any compound calculator for selling CCs? What do you mean? Like, what, to compound the interest rate? Or the yields? You can figure out the yields per day based on your theta and then annualize it. To compound the yield into your principal, I mean, yeah, once you figure out the annualized rate, then you can just use any compounding interest rate calculator. Good luck keeping a steady annualized rate on GME, though. I have a bull call spread. Is it possible to maximize profits by exiting them on different moments? Because I'm reevaluating my prediction. Yes. There can be times when it's like beneficial to, as you move towards expiry, to like close out like the short call, like buy to close the short call and like leave the long call open, or you can sell the out of the money call, right? So say you have like a 30-35 C, right? Debit. Um Sometimes what you could do is you could like sell the 36C, right? Which leaves you a credit spread here, and then take profit on the 30 call, and then let this decay to zero. Or you can sell the 40 or something like that, right? Like you can open the upside credit spread against the, or you buy the 40, sorry. You can open the upside credit spread against the sold call. That's one way of repositioning them. What was your worst weekly return selling weeklies and your best? I mean, I generally tried to avoid selling a lot of weeklies. Ooh, whoopsie. What the fuck was that? Yeah, I see the rejection on futures. It's rough. Interesting. Not quite a failed breakout, though. Crazy volume. Three upside gaps? Hmm. MMs have been boofing GME buys early today to let them hit the tapes as the market's tanking during FOMC. Possibly, although I feel like we just had a breakout, some weeklies sold off, and now we're starting to get more weeklies buying in. I really don't think it's that big of a deal. I don't see too much like direct shorting in the underlying. Liquidity situation's pretty stagnant. China's number is not great. What, last night? Their inflation was pretty flat, which isn't, it's not ideal. Also, China's still kind of reeling from dropping their peg to the dollar. Downside gap. Can this reverse here? Or do we need to get over 35? We do need to get over 35. I can't see why they wouldn't try to pump one more time into the FOMC. We got like 25 minutes till the report. Dovish hikes incoming. The FOMC decision's released at 2 o'clock, and then the presser is at 2:30.
What's up, Pure Mayhem? How you been, man? I know who you are. You still expecting JPOW to be a bit hawkish today? Or are we gonna get the usual cuckish JPOW after this CPI print? I already said I expect him to come out and act like he beat inflation. He's gonna get all kinds of confirmation bias from today's seasonally adjusted print. That's probably it's probably gonna be adjusted again. I hope JPOW claims victory and then PPI is raging hot tomorrow. Me too. Ooh, that'd be rough. Man, that's not nice. Hope Zom hits my PC of 130. Then we do a 2-to-1 split. Maybe they sold too many puts. Possibly. Yeah, it still would appear that the short call position hasn't squeezed off. Which does make selling vol a little tricky up here. Although, I mean, Ivy really didn't drop that much into the peak. $20 for them to pump the shit out of it. SCP is at 2, right? Yeah, all the data is at 2. I'm still salty about from last Friday's epic rug pull from Ryan Cohen. Or reasonable. What's up, popcorn? So let's say you got a calendar put spread that's gone a bit against you and you're a bit low on capital. What's the most effective way to hedge? How much theta do you have? You can roll it to reduce risk exposure. You could get a protective put. You could hedge it off with verticals. You could roll. You could roll like out and down, like buy back the short put and sell new ones at a lower strike. Ban whoever said maybe they sold too many puts. Like, Jesus fucking Christ, you think? I think they actually haven't been selling a lot of puts at all. It's one of the reasons they're having a hard time pumping back to the highs. I think they're well aware of the risk selling more puts presents with that short call position still in place. Hmm. Gap fill. It wasn't even my apartment. I don't really want to look at BIG's options chain. I don't care about it at all. Gaps don't exist if you close your eyes. I don't like this fucking failed reversal. Can Can you please cover how to tell when a volatile move is closing up? If GME runs hard 618, how to tell when it's topping? Well, first of all, volatility will fall off. I know you did a vid, but I can't find it. It's old. This is why you scale out of positions. Well, you don't have to worry about it, right? But I suppose, more importantly, I mean, major psychological resistance, high volume trading, without a lot of price improvement, especially at highs, generally indicates selling. High volume trading with no price improvement and a decline in implied volatility is usually good enough to figure out where the top is. But really, when you hit the top of a run or you hit like the PT, you should already be out of most of the profitable position at that point. I think that's something that a lot of people are still struggling with, is like scaling out of the profitable position. It's very important. $31 was our PT for what? How do you scale out with only one contract? Sell it? Knowing when to scale in? Yeah, I'll say that. See, what you guys constantly try to do is like buy everything, then borrow money from your mom, buy more. Total. Don't do that. The complaining part happens at each buy-in. Oh. See, I can already tell by the mood in chat that you guys didn't buy GME positions yesterday when it was under 25. And you bought positions on GME today when it was over 30. Over 30 was more bullish. That doesn't mean it can't fail a test. I like how our financial markets are based off of dots on a plot. Yeah, they're not even informed dots, right? They're just dots. GME has brought nothing but sadness and sorrow to those who have tried to make money off of it. I've never promised it would bring anything else. I just said we had support at 30, and if we break 35, things get crazy. Options are starting to pick back up a little, IV. That's correct, and snake whips. Will cycles return for GME? We'll see. I hope so. That'd be really cool. If minutes are released at 2, will the meeting itself add anything? Yeah, especially if they don't make any kind of decision. It'll be all about the narrative. We're gonna leave these two big upside gaps open into FOMC. Somehow I doubt it. 6 minutes. Let's go, Bulls. Over leveraged much into those calls? What? No. It's like $4 grand ish. I've got tight risk. Fuck you. I barely made any money on the first GME events, but I learned from you and made a ton with Baby off scaling. Thank you. Nice, man. Are you willing to guess if we tap 5,400 today? That'd be crazy. Not being greedy when you see options profit calculator is the hardest part. I appreciate the honesty. No problem. It's king of the over leveraging game. I was just recognizing game. You feel me? I don't think I'm over leveraged. I think bulls would rather be positioned near the top of their positioning going into the drop of the decision, right? Also, yeah, I also just have super tight risk on it. But I think they try to get a few pumpy candles. And if we break 35, things get kind of bullish anyway. So, like, we hit the ramp up to 50. Or back up to 50. And I don't need a very big move to make 20%. But yeah, options are super overpriced today. It's hard not to be over leveraged. What flavor? It's like mint. Hmm. Two minutes. I'm getting very close. We'll take like a, what is it, like 450 in risk? Hmm. I'm gonna push back against the rising IV into the decision anyway. I haven't pulled most of the liquidity on ES. I just stumbled on a Lady VWAP's OnlyFans page. Man, she's got some big heavies. I see why you're in love and wear the hat. Yep. That was fun. Ooh, summary of economic projections. Everyone wants to keep the rate at 5%. Median at 4% for 2025. Median at 3% for 2026. Ooh, that's rough. Hmm. Big drop in vol. Does it matter? Wait a second. curious. All right, let me see what else. Vote in favor of policy was unanimous. Nobody's in favor of changing the policy target range. Median view of Fed funds rate in the longer run is at 2.8% versus the prior 2.6. Fed fund rate end of 2024 5.1 versus the previous 4.6. Interest rate decision, so yeah, it's just actual 5.5. So no change. Higher longer run rates. Um, gonna continue selling off or rolling off mature securities. Will show 419 officials saw no rate cut in 2024. 7 saw 1, 8 saw 2. Policymakers see 2.1% GDP growth in 2024, unemployment at 4%. It's kind of bearish. Can we even hold 25 here? Hmm. Market maker wants us back at 5,400. Pickled Dad, would you mind looking at when it's behaving like Dog Do, but seems fairly priced? I'm thinking of selling CSPs. There's been a lot of contraction lately in labor, in hospitality, and I would view that as an early warning sign. And others maybe as well. The consumer's pretty strapped. I don't think I would be necessarily bullish on casinos right now. They also have a pretty crazy debt burden, which has been rough recently for them. Their cash flows have been all right, but not fully recovered from the pandemic, right? There's very little support below 54.25. Hmm. If it's just purely for income, I would suggest not selling CSPs on something that's in a downtrend. No cuts, diverging from ECB. Yeah. Forecast shows 2025 PCE and core PCE inflation at 2.3 versus the prior 2.2. Policymakers see end of 2024 PCE inflation at 2.6 versus 2.4. Core seen at 2.8 versus 2.6. They're still trying to hold out hope for one rate cut this year, with some of the policymakers agreeing on, but it's shifted, right? There's far less policymakers at at two cuts than there were. The majority is now between 1 and 0. We got 11 participants at 1 and 0 cuts for the year. Might still get the pullback to 26 on GME. Maybe. I don't know. There's still a lot of support here at 29 and 30. What would be the case for cutting? I don't see one. Um, So read the full thing. Recent indicators suggest that economic activity has continued to expand at a solid pace. Job gains have remained strong. The unemployment rate has remained low. Inflation has eased over the past year, but remains elevated. In recent months, there's been modest further progress towards the committee's 2% inflation objective. The committee seeks to achieve maximum employment and inflation at a rate of 2% over the longer run. The committee judges that the risk to achieving its employment and inflation goals have moved towards better balance over the past year. The economic outlook is uncertain, and the committee remains highly attentive to inflation risks. In support of its goals, the committee decided to maintain the target federal funds rate at 5.25% to 5.5%. And considering any adjustments to the target rate range for federal funds rate, the committee will carefully assess incoming data. the evolving outlook and the balance of risks. The committee does not expect it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably towards 2%. In addition, the committee will continue to reduce its holdings of Treasury securities and agency debt and agency backed securities. The committee is strongly committed to returning inflation to its 2% objective. In assessing the appropriate stance of monetary policy, the committee will continue to monitor the implications of incoming information for the economic outlook. The committee would be prepared to adjust stance of monetary policy as appropriate if risks emerge that could impede the attainment of the committee's goals. The committee's assessment will take into account a wide range of information, including readings on labor market conditions, inflation pressures, and inflation expectations, and financial and international developments. Hmm. So calls then? I don't know. Charm's still negative, and the market maker still wants this back at like 45.05. There is upside range. But things aren't looking all that stable here. This wasn't a good range to fall into. This is like the lower support. Um and there is some support at 25 and 20, but if we lose that, it's a pretty straight shot to 5400. Whereas to the upside, we still really need to clear 35 before things get bullish. And we seem to be having a problem with that, given that since the release of the data, well, since before the release of the data, we couldn't get above 35. Yields didn't move too much. Seemed to be pretty stagnant. A little bounce, but nothing crazy. Dollar dropped really hard. Oh, that's this morning. Why do I have that on the... Hold on. There we go. Dollar picked up a little. $28.39. All right, let's get ready for the presser. Um, all right. Boop. There we go. Well, bulls are pushing back up a little bit here, but I don't know how high they can actually get it. Should be running into resistance right around here. In about 10 minutes. Did I read correctly that inflation is still up, just not as high as forecast? I mean, inflation is up over the last like 6 months. Quite a lot. All of their inflation expectations and projections have moved higher. Also, the number of Fed presidents holding out for 2 cuts shrank for 2024. And also a higher expected federal funds rate for 2025 and 2026. The real MOASS was the price of everything people need and use. Yeah. The market ripped 100 bips because question was the all-time high pricing in increased inflation. How does that make sense? Well, no, the market ripped 100 bips because the CPI headline month over month for today was 0. Rate cuts don't matter we can just tease that there might be cuts. Yeah, exactly. Do with selling calls here on GME, or be a little bit more patient. I would say that we're still at support. Did they pull some mathematical gymnastics to get CPI to zero? Of course. The average price for a gallon of gas is like almost near $4 right now. Food inflation fell 0.1%. You know what? I actually went to a grocery store last night and I saw things on sale. I don't remember the last time I've seen an item like, especially like an entire aisle of items on sale. Did anybody notice that? This like over this last week? It's below $5 at some California Costco's, which is basically free. Although Shell and Chevron are pushing $6. No, I'm not talking about Walmart. Midwest reporting, and things are always on sale here. Occasionally, it's even stuff you want to buy. I haven't seen like a sale tag in a grocery aisle since like end of 2021. Didn't companies admit that they overpriced food products? Yeah, of course. I like my produce the same way I like my zero DTEs. Cheap and about to expire. Excellent. I saw that Cliff Bars are shrinkflating, going from 6 in a box to 5. Yeah, there's still a lot of shrinkflation. Was the orange juice on sale? No, it was like $8. 5.06 a gallon here in Vancouver, Victoria, Canada. Well, we're not measuring Canada's CPI. Already converted to USD. Jesus. You guys don't do the European thing where you pay for liters of petrol? There's 4 hawks this time. My wife says there's a lot of shrinkflation, but she's happy with the overall effort I give. You keep talking like that, you're gonna have another baby. Do you think holding 27C overnight weekly is for Jimmy overnight is too risky? It's definitely risky. I don't know. Is it too risky? When does the period of concentrated covering end for GME? This one, tomorrow, I believe. Hmm. Oh, shit. Hold on. I'm getting it. He hasn't shown up yet. Don't worry.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate over the past 2 years. The labor market has come into better balance with continued strong job gains and a low unemployment rate. Inflation has eased substantially from a peak of 7% to 2.7%, but is still too high. We are strongly committed to returning inflation to our 2% goal in support of a strong economy that benefits everyone. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. We are maintaining our restrictive stance of monetary policy in order to keep demand in line with supply and reduce inflationary pressures. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. Although GDP growth moderated from 3.4% in the fourth quarter of last year to 1.3% in the first quarter, private domestic final purchases, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal on underlying demand, grew at 2.8% in the first quarter, nearly as strong as the second half of 2023. Growth of consumer spending has slowed from last year's robust pace, but remains solid. And investment in equipment and intangibles has picked up from its anemic pace last year. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to slow from last year's pace, with a median projection of 2.1% this year and 2.0% over the next 2 years. In the labor market, supply and demand conditions have come into better balance. Payroll job gains averaged 218,000 jobs per month in April and May, a pace that is still strong, but a bit below that seen in the first quarter. The unemployment rate ticked up, but remains low at 4%. Strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years and a continued strong pace of immigration. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market have returned to about where they stood on the eve of the pandemic, relatively tight but not overheated. FOMC participants expect labor market strength to continue. The median unemployment rate projection in the SEP is 4.0% at the end of this year and 4.2% at the end of next year. Inflation has eased notably over the past 2 years, but remains above our longer-run goal of 2%. Total PCE prices rose 2.7% over the 12 months ending in April. Excluding the volatile food and energy categories, core PCE prices rose 2.8%. The Consumer Price Index, which came out this morning and tends to run higher than the PCE price index, rose 3.3% over the 12 months ending in May, and the core CPI rose 3.4%. The inflation data received earlier this year were higher than expected, though more recent monthly readings have eased somewhat. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households and businesses and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.6% this year, 2.3% next year, and 2.0% in 2026. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue reducing our securities holdings. As labor market tightness has eased and inflation has declined over the past year, the risks to achieving our employment and inflation goals have moved toward better balance. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We've stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. So far this year, the data have not given us that greater confidence. Been more favorable than earlier in the year, however, and there has been modest further progress toward our inflation objective. We'll need to see more good data to bolster our confidence that inflation is moving sustainably toward 2%.
Keeps cutting out.
Could result in a reversal of the progress that we've seen on inflation. At the same time, reducing policy restraint too late or too little could unduly
He's an AI.
on what each participant judges to be the most likely
The
scenario
sound's cutting
going
out
forward.
on the stream.
If the economy evolves as expected, the median participant projects 4.1% at the end of 2025 and 3.1% at the end of 2026. But these projections are not a committee plan or any kind of a decision. As the
Market
economy
likes the
evolves,
dot plot.
assessments
You mean
of
the one that was
appropriate
already released?
policy path will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we're prepared to maintain the current target range for the federal funds rate as long as appropriate. If the labor market were to weaken unexpectedly, or if inflation were to fall more quickly than anticipated, we're prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. We'll continue to make our decisions meeting by meeting, based on the totality of the data and its implications for the outlook and the balance of risks. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to achieving maximum employment and stable prices over the long run. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Shockingly stable
Mr.
for an
Chairman.
FOMC
Steve Leishman,
meeting as far as the
CNBC.
index goes.
Just wondering if you could walk me through the committee's average inflation forecast. Core PCE is now forecast to be 2.8% by the year end. It's already 2.75, and after today's number, there were several forecasts on the street that it would be 2.6 at the end of this month. Does that tell you that the average official expects no further progress in inflation, and in fact that it's going to get worse? And if you have this wrong, doesn't it mean that you sort of, you could have wrong the outlook for rates there?
Yeah, so what's going on there is that we had very low readings in the second half of last year, June through December, really. And we're now lapping those. So as you go through the 12-month window, a very low reading drops out and a new reading comes in. The new reading gets added to the 12-month window. So it's just a slight element of conservatism that we're assuming a certain level of you know, incoming monthly PCE and core PCE numbers. We're assuming, you know, a good but not great numbers. And if you put that on top of where we are now, you get a very slight increase in the 12-month you know, reading. Now, do we have high confidence that that's right? No, it's just a kind of conservative way for forecasting things. If we were to get more readings like today's reading, then of course that wouldn't be the case. So it's just a forecasting device. I think let me say that we welcome today's reading and hope for more like that.
But if it comes in, just to follow up, it comes in the way you forecast it.
God damn.
That just rules that
It's
in
not
or out.
muted,
I mean,
it
really,
just-
it's a
cutting in and
forecast, a
out.
fairly conservative forecast, month by month, that would lead to slightly higher,
Well, there's
you know, 12
subtitles.
months rates by the end of the year. If we get, you know, good, better ratings than that, then you will see that come down or remain the same. If you're at 2.6, 2.7, you know, that's a really good place to be.
They're cutting out all the bearish things he's saying.
Nick Tamaros of the Wall Street Journal. Chair Powell, if I look at the rate projections, I see 15 of the 19 that are anticipating either one or two cuts this year, fairly evenly split between the two. And so I wonder if you could explain a little bit more the nuances or the differences there. Would 2 or 3 more inflation readings, like the one that we saw this morning, make a September interest rate cut possible?
So as far as the SEP part of that is concerned, as you know, I talk to all of the other participants on the FOMC every cycle, and we talk about their summary of economic projections and the their dot plot and everything. And what I hear and see is that people are looking at you know, a range of plausible outcomes, and in many cases they're thinking, I don't really, you know, I can't really distinguish between two of these. They're so close for me. These are very close calls. But we ask them to write down the most likely one, so they do. And as I think as you've said, there's 15 of the 19 are kind of clustered around 1 or 2. So I think I would look at all. I look at all of them as plausible. But I'd look at so I think that does tell you kind of what the committee thinks. But what everyone agrees on is it's going to be data dependent. No one brings to this or takes away from it, that is on the committee, a really strong
We need
commitment
12
to a
full months
particular
of
rate
data
path.
this
It's
year to make
actually
a decision
just
on
their forecast and
2024.
it's a combination of their forecast and their own reaction function.
Are they shorting
but
vol with
again,
puts again?
everyone would
Yeah.
say that this is very data dependent, and I don't hold it with high confidence. And I think if you're looking for and don't really think that they're not
Honestly,
trying to
for an
send a strong
FOMC
signal
meeting,
that
this is
what I
really
think is the
stable,
right thing.
right?
It's just
Like all of our trading is within what? Like 36 BPS range. This fucking stream is garbage. I didn't mute it. It just keeps cutting in and out.
Inflation is moving down sustainably to 2%? Or alternatively, do we see really unexpected signs of weakness in the labor market that would call for a response?
YouTube
Which is another thing that could happen. We see
I'm not
today's
doing that. I'm not
report
doing
as
anything though.
as progress and as
Doing it on its
building
own?
confidence, but we don't see ourselves as having the confidence that would warrant beginning to loosen policy at this time.
And if I could quickly follow up, did you or any of your colleagues change your interest rate projections after 8:30 or whenever you got the inflation numbers today?
So this happens too often, but it does happen. It just is, data came, I think it happened a few meetings ago. So when that happens, when there's an important data print during the meeting, first day or second day, what we do is we make sure people remember that they have the ability to update. We tell them how to do that. And some people do, some people don't, most people don't. And I'm not going to get into the specifics, but you have the ability to do that so that what's in the SEP actually does reflect the data that we got today, to the extent you can, reflect it in one day. I think we'll see PPI tomorrow. We'll know more about the PCE reading as the month goes on, but the initial CPI reading and its
if PPI is raging hot tomorrow
to PCE,
that's
we did have this morning. We were
the
briefed
worst
about it,
possible
and
fucking
people were able to
outcome.
consider whether they should make changes. And as I said, some people
That'll
generally
mean
do,
that
but most people
corporations
generally don't.
are losing the ability to price forward cost increases, which means margin contraction, like
Hi, Chair Powell,
deep
Janelle
margin
Martin from
contraction.
Bloomberg. As you noted, the labor market is now in many ways back to where it was before the pandemic. I wondered if you could comment on how officials are viewing that. So do you think that there
Sounds
still needs to
bullish.
be more cooling in the labor market to bring inflation all the way down to 2%? Or is there any sense that maybe the labor market is more vulnerable now to higher rates now that many of those imbalances
The
have
market is
eased?
stable as the Powell is as
Sure,
stable
so,
as the Powell stream is unstable.
By so many measures, the labor market was kind of overheated 2 years ago, and we've seen it gradually move back into much better balance between supply and demand. So what have we seen? We've seen labor force supply come up quite a bit through immigration and through recovering participation. That's ongoing mostly now through the immigration channel, but still we've had some increases in prime age labor force.
You already talked.
In terms of on the
The
demand
bearish
side,
reporter?
we've seen quits.
He already made it
moving
very clear
down.
that the Fed
We've
is
seen,
aware that they're
job
not doing
openings
their own
moving
job.
down. We've seen wage increases moving from very, very high levels a couple of years
Do you
ago
use
back down to more
5-second
sustainable
candles to
levels.
make it more
We have seen
exciting?
unemployment creep up now 0.6 over the course of a year or so, very, very gradually. So you put all that together, what you have is still low unemployment, still 4% unemployment, historically low. But it's moved up a little bit, it's softened a bit, and that's an important statistic. But more than that, you've got strong job creation. You have payroll jobs still coming in strong, even though there's an argument that they may be a bit overstated, but still, they're strong. So that's what we see. We watch the labor market, of course, and the economy as a whole, but the labor market very carefully, and that's what we see. We see gradual cooling, gradual moving toward better balance. We're monitoring it carefully for signs of something more than that, but we really don't see that.
As a quick follow-up, the surveys that make up the jobs report are showing different tales. There's been some divergence, especially we saw in the last report that we got on Friday. So how do you interpret that, and how does it change your view on the labor market?
So sometimes you can't reconcile the differences. You just have to look at it and try to understand. And that's why it always makes sense to look at a series, in 3, 6, and 12 months of things rather than just one report. But you're right to point to the last report where there were job losses in the household survey, job gains, big job gains in the establishment survey. So, we're left with ambiguous results, and we have to deal with that uncertainty around data. Nonetheless, the overall picture is one of a strong and gradually cooling, gradually rebalancing labor market. Job openings, while they've come way down, are still, greater than the number of unemployed people. The jobs workers gap is still a significantly positive number, greater than it was before the pandemic. So overall, we're looking
Talk
at
about
what is still a very
0%
strong labor market, but not
productivity.
the superheated labor market of 2 years ago, or even 1 year ago.
Thanks, Chair Powell. Neil Irwin with Axios. Back on the rates path, the SEP showed quite large shift of rate cut expectations relative to March. That's a period in which the economic data flow hasn't been that dramatic a shift.
If you can't rely on the data, how can you say
provide some
things
color
are
on what changes in
good?
attitudes on the committee over the
Better
last 3
than
months
saying things are bad?
See a much shallower path of rate cuts this year?
Yeah, the big thing that changed was the inflation forecast. So the inflation forecast moved up several tenths.
No,
for
rainbows,
the end of the year.
unicorns, and blowjobs
And
for
as
all.
I mentioned earlier in the,
Perfect. The American way.
what did we take away from this? We had really, really good inflation data in the second half of last year, then kind of a pause in progress in the first quarter. And what we took away from that was that it's probably going to take longer
Slippery,
to get the
slippery.
confidence that we need to begin to loosen policy. So the sense of that is that rate cuts that might have taken place this year take place next year. There are fewer rate cuts in the median this year, but there's one more next year. So if you look at year-end 2025 and 26, you're almost exactly where you would have been. Just it's moved later because of that progress. Now you get different data.
It's the
today,
same,
so
but different,
We'll have to
but
see
the
where
same.
the data light the way. The economy has repeatedly surprised forecasters in both directions, and today was certainly a better inflation report than almost anybody expected. And we'll just have to see what the incoming data flow brings and how that affects the outlook.
Means?
And the risks.
You almost said, we'll see what the incoming data means.
Gina Smiley, New York Times. Thanks for taking our questions. In the summary of economic projections, the long-run interest rate forecast moved up a bit. I wonder if we should read that as a sign that you think that policy is not sort of as restrictive as we previously expected. How should we interpret what that means about how the committee views its current policy setting?
So two things about that. One is this. You're right, it did move up, but I want to remember to point out that long-run neutral rate of interest is a long-run concept. It really is a theoretical concept, can't be directly observed, and what it is the interest rate that would hold the economy at equilibrium, maximum employment, and price stability, potentially years in the future where there are no shocks. So it's a little bit, it's not something we observe today. Today we've got a very specific economy with all kinds of shocks we're still getting over from the pandemic. So it's, I don't think that the concept of R-star, it's a very important concept in economics and in what we do, but honestly, it doesn't really get you where you need to be to think about what appropriate policy is in the near term. But back to your original question, people have been gradually writing it up because I just think people are coming to the view that rates are less likely to go down to their pre-pandemic levels, which were very low by recent history measures. Now we can't really know that. That's an interesting dispute and discussion to have now. But ultimately, we think
talk
that
about how
things like the
long-run
neutral
rates are going to
rate
be at
driven by
4%.
longer-run, slow-moving forces, and there's a really good question about whether those really have changed or whether instead rates and the economy are experiencing a series of persistent but ultimately temporary shocks. That's been the debate, and we can't know. But in the meantime, we're making policy with the economy that we have, with the distortions that we have. And I also, to your other point, I think it is the case that as time has gone by, the question of how restrictive is policy has become
Negative
one that
charm's
everyone's
getting
asking,
rough.
and we're asking it too. And my answer has been that policy is restrictive. The question of whether it's sufficiently restrictive is going to be one
Out of the
we
money
know over
calls are
time. But
falling
I
off.
think for the reasons I talked about at the last press conference and
Charm's
other
moving
places, I think
substantially
the evidence
more
is pretty clear that
negative.
policy is
But
restrictive
the
and
market
is
maker
having
hedge is also
the
rising.
effects that we would hope for.
So Delta turns negative at 45.12 now.
Thanks, Chair Powell. Howard Schneider with Reuters.
Or
Just to
54
carry that a
sorry,
little further,
54.12.
should we read this as a conclusion, the combination of tipping to one cut this year and acknowledging further progress on inflation as kind of a mark to market on the level of restrictiveness that you need, that you in fact have concluded that you weren't quite there yet?
I'd be reluctant to try to draw that conclusion. I think this is
Inflation
about
isn't down just because we got a flat
looking at the
headline
incoming
CPI,
data
right?
and asking how much
like-
progress are we
like
making on
6-month
inflation,
inflation
and how
is
is the
still
rest of
up
the
like
economy doing? Is the
6%.
labor market still strong? That's what we're thinking about.
The problem the Fed has right now is that inflation is hot as fuck
you can
this year.
translate it into the language you're talking about, but
That's
to
why they
me, the
can't do
focus is
anything,
more
right?
on,
Like they can't
we have a
cut
goal, which
rates. They
is
can't really
price
project
stability,
to
another
cut
goal, which is
rates
maximum
in the
employment.
near term
How are
because
we
now we
doing
need
there? We think we've
now we
got a
need to
good,
fix
strong labor
6
market
months of
still.
rising inflation
we've been making
before we're
progress,
back where we
toward
were
the
last November.
price stability goal. And then for a while there was a pause, and we look at today's thing and we think, well, that's a good reading, and we hope we get more like that. And in the meantime, we're asking, is our policy stance about right? And we think yes, it's about right.
They
We're
can
prepared to
raise
adjust
rates.
it as appropriate, but we think we're getting the things that we would want to get, broadly speaking. And that's why we've been at this policy right now for almost a year.
It's almost like
just
rates
to
should
follow
be
up on that, I
higher.
think
You mean
one
restrictive?
curious thing here is
Yeah.
you've got now this restrictive
Imagine
policy
tight
in place,
financial
and
conditions,
virtually
though. All
no
the banks
change
would
in any of
fail.
the major things for all of this year. You've got growth that stays above long-run potential.
If
throughout
banks
the
can't stay
forecast
leveraged to
period.
the tits, they won't be
Unemployment
able to
that never,
maintain
goes
sufficient
above
reserves.
The long-run estimate, right, of 4.2. So this isn't a story of slack improving inflation. So where's the improvement in inflation coming from that it's going to pick up pace so much in 2025?
Well, it's been coming. Where's it been coming from? We'll start with that. Clearly, a lot of some of what we've been getting is just the reversal of the unwinding of the pandemic-related distortions to both supply and demand.
You said those
And
were
that is,
unwound.
that is complemented by and amplified, supported by
Thanks,
restrictive
Tim.
monetary policy. So those two things have been working together. We've also had a very positive supply shock on the labor side, and also you get a positive supply shock when the supply conditions unwind and return to normal. So you've had, above trend potential growth and high growth, and yet you've had the benefit of inflation coming down, really fast actually last year, and you will see as long as they continue. Ultimately, the question is ultimately, are you down to, and we don't know that. Look at today's report. If we see more like that, we can't know what the future holds. But in the meantime, we've made pretty good progress on inflation with our current stance.
Michael
Yeah,
McKee
it might
from
be.
Bloomberg Radio and Television. The base case of the committee seems to be that there is going to be at least one rate cut this year, but your growth forecast doesn't see any slowdown in the rest of the year, nor does the unemployment forecast see any significant weakening of the labor market. And your inflation forecasts basically average out to no change. So if at the end of the year there is no change from conditions now, why would you anticipate cutting rates? What would be the point for a rate cut?
Well, we think policy is restrictive, and we think ultimately that if you just set policy at a restrictive level, eventually you will see real weakening in the economy. So that's always been the thought, is that since we raised rates this far, we've always been pointing to cuts at a certain point, not to eliminate the possibility of hikes, but no one has that as their base case. So no one on the committee does. But so that's how we think about it, and that's what we've been getting. That's what we've been getting is good progress on inflation, with growth at a good level, and with a strong labor market. Now, ultimately, we think rates will have to come down to continue to support that, but so far they haven't had to, and that's why we're watching so carefully for signs of weakness. We don't really see that. We kind of see what we wanted to see, which was gradual cooling in demand, gradual rebalancing in the labor market, while we're continuing to make progress on inflation. So we're getting good results here.
Well, to follow up, is there any kind of concern for the housing industry or financial stability, banks, in leaving rates where they are for too long at this point?
On housing, the housing situation is a complicated one, and you can see that's a place where rates are really having a significant effect. Ultimately, the best thing we can do for the housing market is to bring inflation down so that we can bring rates down so that the housing market can continue to normalize. There will still be a national housing shortage, as there was before the pandemic. There will still be one, but the distortions that we see now with lock-ins and things like that, low mortgages. In terms of banks, the banking system has been, solid, strong, well-capitalized, lending. We've seen good performance by the banks. We had the turmoil early last year, but banks have been focusing on bringing up their liquidity, bringing up their capital, and having risk management plans in place. So the banking system, seems to be in good shape.
Chris.
Thanks. Chris Rugaber at Associated Press. I was wondering if we can, on inflation, if you can tell us a little more about where you see inflationary pressure in the economy. You mentioned labor markets coming into better balance, and inflation expectations appear to be well anchored. You're seeing, anecdotal stories of the large chains like Walmart and Target are announcing price cuts. McDonald's announcing a $5 meal deal. So, people may still be unhappy about prices at the grocery store, but it doesn't seem like there's a lot of inflationary pressure left in this economy. I wonder if you could tell us more about it.
I think it's true that inflationary pressures have come down, but we're still getting high inflation readings. So, and I think you can see it in various places. In some parts of non-housing services, you see elevated inflation still, and that's probably it could be to do with wages. Goods prices have kind of fluctuated. There's been a surprising increase in import prices on goods, which is kind of hard to understand, and we've taken some signal from that. But and of course, housing services, you're continuing to see high readings.
Why
there.
are these other countries importing their inflation to us?
Catch-up inflation
Stop
from
it.
earlier pressures. But overall, you're right. Inflationary pressures have come down. As I mentioned, the labor market has come into better balance. Wages are still running, I would say, above a sustainable path, which would be that of trend inflation and trend productivity. You're still seeing wage increases.
Productivity is at
moving
zero.
above that. We haven't thought of wages as being the principal, cause of inflation, but at the same time, getting back to 2% inflation is likely to require return to a more sustainable level, which is somewhat below the current level of increases in the aggregate.
Rachel.
Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. There's obviously a lot of focus on how many cuts could be expected this year, but can you give us a sense of what one cut by the end of the year would actually do to the economy, what you think would be a meaningful difference if there was a cut by the end of the year, or even two?
I think if you look back in 5 or 10 years and try to pull out the significance to the U.S. economy of one 25 basis point rate cut, you'd have quite a job on your hands. So that's not how we look at it. Really the whole rate path matters, and I do continue to think that when we do start to loosen policy, that will show up in a significant loosening in financial market conditions, and the market will price in what it prices in. I have no way of saying, we're not at that stage, so I don't know what we'll be thinking about at that time. But it's a consequential decision for the economy, and you want to get it right. And fortunately, we have a strong economy, and we have the ability to approach this question carefully, and we will approach it carefully while we're very much keeping an eye on downside economic risks should they emerge.
And you've been talking about this clear sense that it's just going to take longer to have the confidence that's needed for rate cuts. Is there something about what happened in the first couple of months of the year that you're seeing differently now with more time or hindsight? Do you still characterize it as expected bumpiness or something more lasting that is affecting your policy for the rest of the year?
We always want to avoid the tendency to dismiss the parts of inflation that we don't like and just make it go away. But we had a quarter where inflation was running higher, and yes, I could stand here and say it's stuff we shouldn't have taken signal from, but it is what it is. You have to, low inflation is low inflation, high inflation. So if you have a quarter where it's higher, we tried not to take signal from the first couple of months, but we got a third month and we said, okay, the signal we're taking is that, we think it's going to take longer to get confidence that inflation is moving sustainably down 2%. That's what we said. I think that was the right thing to do. I still think that's the right thing to do. Now we have today's inflation reading, which is very different, very much more positive. We're going to have to see what the trend is, what's going to be the data going forward. We're looking for something that gives us confidence that
Yields are
inflation
still moving up.
moving sustainably down to 2%. And readings like today's, that's a step in the right direction, but one
Correlation's not
reading
breaking
isn't.
down,
It
but
just
the curve is
it's only one
steepening
reading. You
again.
don't want to be too motivated by any single data point.
Jolene. Hi, Chair Powell. Thank you for taking our questions. I'm Jolene Kent with CBS
This pump
News.
might not be sustainable.
What's your message to Americans who are seeing encouraging economic data but don't feel good about this economy?
I don't think anyone knows, has a definitive answer why people are not as happy about the economy as they might be, and we don't tell people how they should think or feel about the economy. That's
Tough
not
it
our
out.
job. People experience what they experience. All I can tell you is what the data show, which is we've got an economy that's growing at a solid pace. We've got a very strong labor market with unemployment at 4%. It's been a long time since we've had a long stretch of time with unemployment at or below 4%, very long time. We had a period of high inflation. Inflation has come down really significantly, and we're doing everything we can to bring that inflationary episode fully to a halt and fully restore price stability. We're confident that we'll get there. And in the meantime, it's going to be painful for people, but the ultimate pain would be a period of a long period of high inflation. It is people who, lower income people at the margins of the economy who have the worst experience, who experience the most pain from inflation. So, it's for those people, for all Americans, but particularly for those people that we're doing everything we can to bring inflation back down under control.
As just a quick follow-up here, you've indicated one interest rate cut sometime this year, and I know you don't have a crystal ball up there, but a lot of people are watching and see, borrowing money remains very expensive. For everybody who's out there waiting on a rate cut, about when can consumers expect some relief?
Well, I don't have a precise date for you, but what we said is that we want to make sure that we're confident that inflation is actually moving back down to 2%. And when we are, then we can look at loosening policy. So having that kind of confidence that inflation will be at 2%, it just pays benefits to the whole economy, to all Americans for a long period of time. We had that period for a very long time. We very much want to get back to a place where people can not think about inflation. It's just not a concern in the everyday economic decisions that they make. We were there for a long time, and our goal is to get back to that place. And we've made good progress, and we're in the phase now of just sticking with it until we get it done.
Claire.
Claire Jones, Financial Times. Just drawing on the change in the statement on there being modest further progress on inflation. Halfway, through the year and after today's CPI release, what have you and other committee members found that has been particularly encouraging to you? And just in terms of the conservatism, how much of that is about stickiness in shelter inflation in particular? Thank you.
So encouraging has been that growth, the growth clearly that we had last year, and particularly the second half of last year, and we continue to see still strong growth, or solid growth this year. That's been very encouraging. If you go back a year, there was a real concern about, very much slowing growth and a recession. Many forecasters had that. And that's not what happened. Instead, the U.S. is, anyway, and it's in sharp distinction with many other advanced economies around the world. So that's been encouraging. I would say that today's inflation report is encouraging, but it comes after, several your reports that were not so encouraging. You ask about, your second question was really about shelter inflation. So I think if you go back a couple of years, we know that there are renters, and then there are people who own their houses, and we have OER, which is owner's equivalent rent. And so when market-based rents go up sharply as they did at the beginning of when the economy reopened. They really went up sharply. Those play into rollover rents much more slowly for existing tenants than they do for new tenants. And so we found now that there are big lags. So there's sort of a bulge of high past increases in market rents that has to get worked off, and that may take several years. Nonetheless, as long as market rents are going up at relatively low levels, and they still are, this is just going to happen. It just is going to happen more slowly than we thought. We also do sort of this thing where we impute a rental value to owned homes, and that's many countries around the world do that. Some do it differently than us. It's something that the price experts have regularly looked at. It is not something that we're the only country that does, and it's not something we're looking at changing or would look at changing, anytime soon. But it's true. It's one of the very hardest things in inflation and in prices is how to think about, the services that someone is getting by living in a home that they could rent, but they're actually living in it. And some countries choose to just ignore that, but that's not how we do inflation here. We do it the way we do it, and we've been very transparent about it. And it's true that we're seeing delays in realizing what's happening economically, but we understand that. We understand that very well.
Edward.
Edward Lawrence with Fox Business. Thank you for taking the question, Chair Powell. So I want to go back to jobs and the consumer. The last jobs report showed that over the past year, 634,000 more people took multiple jobs. That's up 8.2%. And since January of 2021, we've seen prices rise 19%. So people are using their credit cards to pay for their lifestyle. What pressure points will signal to you that the slowing economy could maybe break companies in terms of hiring or break the consumer in terms of spending?
So, we monitor all the things you mentioned and more. What we're seeing is basically spending was going up faster than disposable income during big parts of last year rather. And so what you'd expect to see is people spending more on their credit cards. That has been happening. Credit card balances have been going up. Credit card defaults have been going up. They're not at high levels. Remember that after the pandemic, people were cooped up. They couldn't spend money. They couldn't go out to spend money. They could spend money from home. But households were in very, very strong, historically strong financial shape. They've now worked off a lot of that. So we're watching that carefully. And, what do we see? That's what we see. We see the same data that everybody else sees, but you've still got household sector that's in pretty good shape. But nonetheless, it's not in the kind of shape it was in a year or two ago. And we're carefully watching that.
So how close then are we to that point where the consumer can't continue to spend as it's spending, or companies can't hire like they're hiring?
Consumer spending is still growing. It's not growing at the pace it was growing at a year or so ago, but it's still growing solidly. And by the way, other parts of the economy are picking up. Spending on equipment and intangibles has picked up quite a bit in the wake of all the construction that we saw of new tech plants. So overall, the economy is exhibiting solid growth, and something around 2%, which is a good pace of growth for the U.S. economy. But you're right though. We do see the same thing other people see, which is increasing financial pressures on more lower income people, and the best thing we can do is to foster a very strong jobs economy, which we think we have done. Ultimately, to get inflation under control, because those people experience inflation, very directly, very painfully, and once we get inflation under control, rates can come down, which will also improve things.
Victoria.
Hi, Victoria Guida with Politico. You've mentioned that an unexpected weakening in the labor market would bring rate cuts sooner, and I was just wondering, can you talk a little bit about what that would look like? Is it more of like a quicker pace of people losing jobs? Is it more the level of the unemployment rate if it were to start to go above 4.2 or something like that? How are you thinking about what you're looking for to see the job market unexpectedly weaken?
When I say unexpectedly, the first thing is more than kind of is in our forecast or in common forecasts. So something more than that. But we'll be looking at everything. You know, the labor market, you know, has the ability, has the tendency sometimes to move to weaken quickly. So waiting for that to happen is not what we're doing. You know, we're watching very carefully. We're looking at the balance of risks. I always point out the balance of risks. So, and also the fact that we look at all of the whole situation. So, you know, a decision to begin to, you know, to loosen policy could have several reasons associated with it at a given time. But I would just, you know, we monitor all the labor market data, and if we saw troubling weakening more than expected, then that would be something we'd consider responding to. But we look at the broader context of what's going on.
It's like 50 to
So something like negative payroll numbers would be.
I'm not
now?
gonna. I mean, I can think of things that would, many things would make it on that list.
It's getting
but I don't
closer
think
to
I'll-
spot really fast.
Butter them here.
Thank you, Chair Powell. Simon Urbanovich with The Economist. May I ask, you mentioned with the slightly higher PC readings earlier this year that it wasn't 1 or 2 months, but 3 months that tipped you to be a bit more cautious in the rate outlook. Should we take from that, you know, it looks like May will be quite good for PC as it was for CPI. Does that imply that kind of 2 more good months would reinstill the confidence that rate cuts could be coming sooner than you currently project?
You know, I don't actually have that kind of mechanical thing in my thinking. I get that, you know, as many good ones as we had bad ones, but no, it's not like that. It's the whole, it's going to be the totality of the data. The labor market data, the growth data, in terms of inflation, you know, you'd want to see real progress that builds your confidence that we are on a path down to 2%. And I don't want to try to give you specific numbers of things, because that points to dates, and I just don't think we're not at a point of being able to do that.
Thank you for doing this. I'm Kosuke Takami with Nikkei. I would like to know about the impact of stronger dollar on U.S. economic growth and prices. And I have no doubt that the market should determine the exchange rate, but Japan and some emerging markets are suffering from the strong dollar. So I want to know if it is having a positive impact on U.S. economy in total. Thank you.
So we don't, actually it's our finance ministry, the Treasury Department, that has a responsibility for thinking about and if it sees fit, doing things about the level of the dollar. So for us, it's just another financial variable. And you're right, the dollar has been, has exhibited some strength over the course of the last year or so because the U.S. economy is very strong. We don't think of it as benefiting or hurting the U.S. We don't manage the level of the dollar. That's not our job. It's not, you know, and for our economy, what we're trying to foster is maximum employment and price stability, and we feel like we've made good progress on both of those goals over the course of the past year.
Jennifer. Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You said you would cut rates before inflation falls to 2%. You're forecasting inflation to end the year at 2.8% on core PCE, or at 2.8%, of course, on core PCE. Right now, you said the inflation forecast is conservative and that if you got 2.6 to 2.7 on PCE, that would be a good place to be. You also indicated the job market has mostly normalized. So why not cut rates this summer just once, you're well above neutral, to try to preserve the soft landing rather than risking waiting too long in the quest for confidence for inflation?
You know, so we're well aware of the two-sided risks here. Let me just say, we understand that if we wait too long, that could come at the cost of economic activity, of employment, of the expansion. We understand that if we move too quickly, we could end up undoing a lot of the good that we've done and have to then start over, and it could be very disruptive. So we're extremely aware of both of those risks and just basically trying to manage them. And what we said is that we don't think it'll be appropriate to begin to loosen policy until we're more confident that inflation is moving down to 2% over time on a sustainable basis. That's kind of been our test. or there's another test, which is, an unexpected deterioration in labor market conditions. So I think that's the right way for us to think about it. That's our dual mandate there. And, we have a strong economy. We've got growth. All forecasts are very commonly around 2%. That's a strong growth rate for our economy. The labor market continues to print jobs at a pretty high rate. Unemployment's still low. So we have the ability now to approach this question carefully, and that's what we're doing.
And just to follow Chair Powell, do you need to be ahead of a weakening in the labor market? Otherwise, is it too late, given that the labor market is a lagging indicator, right, when you look at the monthly jobs data?
Yeah, we completely understand that that's the risk, and that's not our plan, is to wait for things to break and then try to fix them. We're trying to balance these two goals in a way that is consistent with our framework, and we think we're doing that.
Evan.
Thank you, Chair Powell. Evan Reiser with Market News International. You have mentioned before the framework review process will start in the latter half of the year. At this point, do you have any specific time frame for the start of that? Who will lead it? Will it be you or a committee group of your peers? What will be the parameters? Do you anticipate the review will consider changes to communications going forward?
So what we've been thinking is that we would announce and commence the review later or late in the year. In the meantime, as that time approaches, we will be devoting a lot of careful thought and planning to the contours of it. Within scope would certainly be communications generally. I'm not going to say that we'll look at this or that particular thing, and all the other details. We don't want to get prematurely into a conversation until it's really time to have it. And so, I'm going to leave pretty much everything else to later in the year.
Go to Nancy for the last question.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. Just one more question on housing. Can you still cut rates with shelter prices high, or will you wait until they start to moderate a bit?
I wouldn't. There isn't any one variable like housing prices moderating that would really decide or decide against what we're doing. We've got an overall test, which is greater confidence that inflation is moving down to 2% on a sustainable basis. That's our overall test. Or alternatively, we see unexpected weakening in the labor market. So those are two different tests. I would say, we're not looking at any one price in any one sector and saying that's the one. We don't target housing prices, for example, and we don't target wages. We target aggregate prices and overall employment. So,
but if housing prices remain sticky, could that slow down the pace of rate cuts?
I think you look at we'll be looking at the aggregate numbers and asking ourselves what's going on here with inflation at the aggregate level. And of course, if any price that contributed to ongoing inflation would matter. Any price that contributed to ongoing disinflation would matter too. But I wouldn't single out housing as having a special role there. Thank you very much.
So a lot of nothing. What now? Good question. Rates don't seem to like anything that Jay Powell said during the presser. And they've been rising pretty consistently throughout this entire period of time. Dollars pushing up, financial conditions are tightening. But the thing I'm more interested in, and really what I'm betting on here, is that bulls are unable to run away from the decay of charm. They bought so many fucking out of the money calls this morning that Charm is really fucking their delta position, and they're pushing hard as hell. But by selling those puts, they're also pushing the market maker's neutral point closer to spot. And it's now, you know, above 54.25 where the call wall is. So a failure here could actually mean a failure all the way to into negative, like negative delta, which would be exceedingly bearish. So if anybody's wondering why I'm over leveraging 50-cent puts, that's why. Might be a really bad idea, but it could be awesome. Like here, Charm is deeply negative. It gets worse the closer, the further down we go, the worse it gets, because the more calls fall out of the money and the delta starts falling off of them. We start to get, you know, some Vega exposure on the intraday as we fall through like 24, 25. Precarious. It's a precarious pump. And all of these are sold, right? They shorted the fuck out of vol here. So they can get squeezed out, you know. Selling this shit at 10 cents. It's at $1.10 now. It's 1,000% loss. I know everyone's thinking, Gherk, why are you so crazy? But it's not that crazy. That was fun. Now, if they don't regain 25 and hold it, we can do even more fun stuff. I don't like the gap, but You're my hero, Mr. Pickle. Thanks. That was awesome. I honestly didn't think they would push so hard to try to save those $40 calls. It didn't seem worth it. I'm not sure why they did it because they just expanded their risk so much. Like now we're negative delta, gamma, everything on the 0 DTE, right? We could just keep falling. It's fucking what 53.80. I mean, it could really fucking drop. They're gonna need to try to stabilize things somewhere in here, but ton of risk. What a ridiculous shitload of risk they put on there. I'm pretty happy with where I sold, I think. Yeah, it's like still in the upper range. Careful here. I mean, they slipped just below negative, but you know, they'll probably try to fight back. I don't like that gap at 30. That's dangerous. Did someone call Drill Team 6? I took profits off the table because I was way overextended on those, but had I not had such a large position, there's definitely a chance that this hits 5,400. Making it cheaper for you guys to import, thereby cutting inflation. Here's the problem, though. Other countries are importing their inflation to us right now. Right? We export it. We've spent the last 3 years exporting our inflation to everyone else by maintaining the higher rate, right? But now as the rates start to diverge, that inflation's flowing back. And that's something we've seen pretty strongly over the last like 6 months. Did you make 100% on those 5,400 Ps? Like 60, 75%. Cost basis was like $1.40 something. And I sold them between like 235 and 210, so like about 220 a pop. It's about 65% ish. I wonder how much the out of the money call is here. Back to 25. Holy fuck, man. Why would the 5,400 was only cheap because they sold the fucking shit out of it. The calls are so much. If we lose 5,400 here, this thing can just crater, right? It'll fall back into those sold calls, and then the market maker is just going to dump so much. If PPI comes in hot tomorrow, like significantly hotter than the gain month over month in CPI, that's really bad. GME bleeding. Yeah, still. Rough. If that doesn't pick up into the end of the day, we could be in trouble. How are we looking at these? Yeah, still up. Not as up as I'd like to be. Let's sell the 5410 put. Dangerous. I feel like, fortunately for the bulls here, a lot of bears are just gonna capitulate, right? Because they made so much money so fast on the dump. Pumping. How much is the 40? It's fucking not even worth it. The 30? They're getting a bit of control on volatility. Looks stable there. I'm gonna sell the put. $2. $20.25 resistance. Oh, there's the 2680 test. Or, do we need to go lower? Is it 2662? 20. Do you feel legit bailing? Is he? Yeah, there's some volume at the strike. He could roll up. He's still profitable. Even at this price, those calls are up, almost 100%. 60%. He could roll up to 25 at what, like 2 to 1? Ooh, failed. Interesting. Delta's still negative. How does today impact your thought process on rolling your September Vega 2Ds? Have you rolled them all yet? I rolled some, well, not rolled, but added. I added some while we were like VIX 3-month under 14. Like 10 contracts. I didn't pick up any Octobers, but there wasn't a lot of time. This is the trend test for GME right here. The technical trend. It's also the reversal point for the inverse head and shoulders on the 1 hour. So this is really going to need a bounce. Mm, 53,000 volume at DFE strike. Looks like the 30s being sold very, very heavily. Arb's starting to get a little bit blown out. Liquidity is not shifting much. I don't really worry about the extent of the wick. I think the important thing is the 25.75 support. Let me see if this looks like a 30-minute. And vol shorting's about bottomed out here. Is this bullish on GME? If it catches a bounce, yeah, it could be. Straddles aren't doing a great job getting this under control. See what indexes do. I mean, it's gonna play a pretty big role. Charm is still pretty negative. We got like 15 minutes. Hmm. Tomorrow's the 13th. So let's see what settles tomorrow. Yeah, but he, like I said, he can still roll his calls up at and increase leverage, right? So he could roll his calls up to 25 and have 240,000 calls. Bouncing back a little. Double bottom here. Reversal if it clears 54.25. Did I understand you right? When you added to leverage down your September Vegas, you're still that confident in at least a profitable enough mean reversion? Yeah, I think so. Not a crash between now and then for you to exit them profitably. I mean, they're also still a hedge, right? They're not just like a raw position. I'm long the market. And I mean, not all of my portfolio, but 12% of my portfolio. And my dividend portfolio, right? So I have a bunch of long exposure that I have to hedge, regardless of how I feel about mean reversion and volatility. I need to maintain a hedge on that position. If he rolls to 25 and increases leverage, he would be the world's biggest Chad. Especially if he does it for the 21st. Wait, what the fuck put did I sell? Oh, okay. That's fine. Yeah, I mean, if so, you know, we're getting some selling here, right? But you know, we're still not super liquid, right? Liquidity's still getting kind of crushed. We've got ARB starting to like turn pretty negative. You know, ARB's the average spreads at like -20. You know, this is inherently bullish on the flip side, right? When the arbitrage closes, it forces buying. You know, we're kind of bottoming out as far as like getting oversold here, and you know, we on the technical side of things, we held the trend. It looks like most of the volume traded is in line with our, you know, our inverse head and shoulders here. Right? If we close back above that, or we bounce into close, that's bullish, right? Like that's the reversal. That's where it forms. DFE sold? Yeah, a bit. That in and of itself could be bullish, though. Imagine the counter hedge to his position, and that's gonna fall off. That's on some calls, because I bought some. I mean, oil's moving back up into the $78 range. The short on it didn't last long. It's once again additive to inflation. Metals are moving up a bit today, right? Dollar's picking its strength back up. Yields have almost fully reverted the drop from earlier. So now it seems like nobody fucking believes the CPI print at all. Like, look at yields in dollar today. Isn't CPI priced in? I think people are worried. I think they're starting to realize that if PPI is hot, sales are down, PPI is hot, wages are stagnating, and productivity is at 0, that there's much bigger problems than simply inflation. Not to mention that JPEG looks like he has no clue. I thought it was hysterical when he was like, we'll see what the data means earlier. Fucking... Yeah, Schwab's just fucked up, I think. What do we see super high volume if he was rolling? I mean, even the positions, even the volume on his strike may not be him, right? You guys presume a lot. I don't see any reason for him to sell here. Even on the drop, I mean, his fucking contract hit like $7, right? And we can look at the contract too. We can see where the volume is on it, right? We can get an idea. Like, so pull up the GME chart up here. Right, big spike of volume here. Like 873 contracts. Oh wait, that's the wrong contract. 1 second. It's July, June, there. Why didn't it fucking switch? Got 5,000, 5,000, 5,000. Yeah, he's probably selling. 5,000, 5,000, 5,000. Interesting. We got buys on the contract here. 3,000. 2,000. Huge buy there. Another 5,000 block. Yeah, that's what he was trading before, was 5,000 blocks. Ooh, I'm gonna get all my credit. I should have sold more puts. Let me look at something here. The 30 strikes got see the 25 strike. 30 strikes got 92,000 call volume. 25 strike has 27,000. 40 strike has 54,000. But if he was selling, why not sell earlier? Why start selling here? I don't know, we'll see. I'm sure he'll post his position update tonight, right? Well, the roll leverage down here sucks, though, right? He could have rolled at much higher leverage earlier. And I don't think the 20 strike trades are 1-for-1 with the 25, right? 25 appears to be mostly short puts today. A lot of short puts at 20 too. I don't think people are buying those because they're just super overpriced. We got Dixie, not GMA. Oh. Oh. There you go. Tomorrow's Thursday. So we got a good short in before the charm decay kicked in. tomorrow. But Charm's still not gonna be that bad tomorrow. Hmm. I would prefer to close above trend. Arbitrage negative 22.1. And for tomorrow's extension schedule, 13 covering from 6-6. Ooh. Tomorrow could be interesting. I would like to see GME close above 25, like 25.75. Ding ding. Yeah, a little short. But still 25. What godlike prediction when we tanked? Thanks, man. That one was risky, but profitable. If DV didn't sell, then when is his contract hit 565? He was down 240k. His cost basis is 565, isn't it? They're big blocks on the 30C, 40C at the same time as the 20C sales. I can't see him wanting to move out of the money. That doesn't make a lot of sense. It was 567? Oh, okay. I thought it was 565. Think RK is selling to exercise? He could be. We'll find out in after hours if things get weird. Anyway, yeah, let's take a look at the market for today because it's a lot of information to digest. Okay, GME's regaining 75 in after hours and 26. Maybe tonight we get some resolution of this negative arbitrage, which could drive some buy pressure. We're also got a big uptick in illiquidity here. Ooh, maybe he is exercising now. That would be interesting. I wonder how much GM moved up today. Well, we'll find out in a little bit. I'll let you guys know tonight. But yeah, let's take a look at stuff. All right, so we regained support in after hours, 2630. Getting back above that 2675 level was, or 2575 level is pretty important. So 3% return so far in after hours. That could continue to drive up as arbitrage is attempted to be resolved. This arbitrage is pretty deeply negative. There's the zero line. Here, I'll put it on there for you guys so you can see where it's at. Zero. There we go. So there's the zero line. You know, when arbitrage is negative like this, that means, you know, people want to go long GME on the US side, short GME on the euro side, right? That's how you make the money there. yeah, liquidity kind of got a little bit more illiquid into close here. That could be a good sign for tomorrow, especially if that trend continues to persist. Volatility or like realized variance kind of dipped a little lower than we would want to see today, but could still recover. It hasn't cratered or anything. And on the 1 day, I think things are still kind of stable. Yeah. We're definitely getting towards, I think we're getting towards like the end of this, but we still have 2 more days of settlement in this deferral period, 6/6 and 6/7, where we still have very high volume days. Tomorrow's settlement for 15, or I'm sorry, tomorrow's settlement for 4210 F6 is from 522, which was back here. 5, so back here, before this big short. And then tomorrow's settlement from 4210 G10 is from the 10th. That's the T3. And the T5, or the transactions access mark to market deficiency for tomorrow, is from 6/6. So that would be like ETFs. So tomorrow could be kind of interesting. We'll see what happens in the overnight session, but I would say we still found support. We found a higher low. So on the technical side, not too bad. May get one more round of liquidity realization. I mean, this one is more akin, right? Like if we're getting covering largely from here, right? This is kind of akin to that, right? Assume that you get the inverse, right? So you get the drop, right? And you get that, and here you get the up, right? That's kind of how that works. So yeah, this is what's settling out, tomorrow, right? And so that should drive, upside move. So we'll see. Still just a theory, but we'll see how that works. But I'll get all the options data and stuff written up tonight. I'm sure we lost a lot of weeklies on today's drop, which might not be a bad thing, right? If it pushes that negative charm down going into tomorrow, could be kind of bullish. SPX moved significantly over the market makers expected move. 15 bps at close though, right? So we did drift back towards where that market maker was hedged off into the end of the day, and we lost quite a bit of that out of the money bullish positioning at 5400 and below this range. There is actually very little not only is there very little support, but there are a massive number of sold calls, and these have not squeezed off yet. They're pretty far dated. They don't have any reason to squeeze off on such a small loss. I mean, especially if you consider that there's still in the money puts that have been sold that are still in the money, even with this move to the upside. There's like puts at like 5,500 that are sold and underwater, right? So this, maintaining the margin on those sold calls isn't a big deal right now. But those go all the way down to about 5,310. If we do fail below 5,400, the reversal could be very sharp, because currently the market makers long these, right? They're carrying a huge huge delta hedge, right, on those calls. And if we hit those calls, they're just going to dump it all. So yeah, that's kind of the situation we're in. Bulls definitely need to be able to hold that 5400 level. Which I don't know, we got a double top here on ES. They may not be able to do, right? And that's really just like a pullback to trend. And that's not very far away right now. You know, it's just another, no, like $30 for us to hit 5400 ES. And then yeah, that can trigger a drop, like well, maybe down to there. All right, so we got the breakout of the like continuation consolidation that we've had over the last couple of days, but it's failing. And if it fails faster, it could fail very quickly. So we'll see what happens with that. Commodities up a little bit, up a lot more this morning than they are now, with the drop in dollar, but dollar inched its way back up into the end of the day. Commodities fell in line with that, but oil and metals did improve. So you know, especially as central bank divergence kind of locks in, and the risks become more apparent, we should see more speculation in the commodities market, and that could draw capital away from risk assets. So keep an eye on commodities, but nothing crazy just yet. Yields climb back up into the end of the day with Powell's speech about not knowing anything. Core 3-month hit a new all-time low. So you know, 3-month dispersion, really just getting fucking leveraged into as hard as feasibly possible, and we see a lot of that. It's very obvious in like the NQ, right? Or NQ is, you know, still up 127 points on the day, and you know, dispersion into the 1 month also picking up quite a bit, but not nearly as much as core 3-month. We got the Japanese carry trade getting levered back up again, ironically, into tomorrow night's BOJ decision. Part of this is, you know, the yield curve re-steepened, but they wanted to keep correlation with volatility muted, right? And so they shorted vol really hard. That, you know, tends to leverage up the carry trade. They may not be able to keep a handle on that, but they do have some room. I mean, we're not at all-time highs. We're just really, really close to them. Bond volatility has been picking up, and it'll have picked up more today with the move in the 5, especially the 5 and 10 year, down, you know, 200, 220, 186 BPS. So we'll probably continue to see correlation on the 3-month and bond volatility diverge, which again is very strange. Those two things should be in sync in a healthy market, and highly correlated, and currently they are not. Looks like more tail risk pulled back, but this may just be the moneyness of the tail risk again, because we moved up so hard that we're just, you know, the out of the money puts are now just further out of the money. And still S&P 33.79% of the S&P trading over its 20-day moving average. So no breadth, right? We still don't. I mean, Dow's down on the day, right? Even though NQ's up 124 points. Russell kind of had a little bit of expansion. And RSP didn't do badly, but compared to the performance of the S&P, it did pretty terribly. So yeah, we're still missing a lot of the breadth there. Hold on one second. These are backwards. Oh no, they're not. Yeah. Okay. VIX and cash VIX correlation is increasing. You know, part of this, again, we're moving into the VIX monthly contract, like the contract in front expiration. So correlation will pick up anyway as the spread between the futures contract and cash VIX narrows. But the thing we use here to look at that that is one effect, but also as they align more, you're going to get more positive demand for volatility. So that's both scenarios are true. Like the increased correlation increases demand for volatility, and correlation just increases with the passage of time as well. But this is a significant drop from, or increase from last week, right? We ended last week at negative 31% positive correlation. This week at right now so far, the week's not over, at negative 23.2%, right? So about an 8% increase in positive correlation between those two. And generally, when you move into a period where correlation on VIX and cash VIX turn fully positive, you're dealing with a much more liquid volatility market where volatility demand is higher, and you'll start to see more increases in volatility. You'll see volatility, kind of move back into a more natural state than we've seen over the last, literally since November. And Fed fund futures priced as high as 0.4 rate cuts today before the Fed decision, now pricing in 0.34, which is even lower than we were at earlier in the week. I really don't think this is very significant. What we do have tomorrow that matters a lot is PPI, right? And the reason PPI is so important right now is corporate sales are way down on the last GDP report, right? And this is, this is where corporations pass costs onto consumers, right? And generally, as inflation rises, corporations increase prices. Consumers pay those prices, and that feeds back to higher profits, right? And in this way, corporations benefit from increased inflation, right? And this, you get margin expansion, which is bullish. Over time, however, as the consumer becomes more ground down and their ability to spend declines, spending power. Now remember, wages are flat, right? So the wages aren't increasing spending power. As their spending power declines, corporate sales will decline, right? And as corporate sales decline, corporations lose market share to competitors who may be making more money or not charging as much money. The consumer will move to find the better deal, right? And if they can find the better deal elsewhere, the corporation in question, whichever one, doesn't matter, will start to lose market share. And in order to stop the bleed of market share, they have to start eating some of those costs, right? And then what happens is, so they get declining sales, they react to declining sales by eating some of the costs, and that brings down inflation on the consumer, right? Because now those prices aren't being passed forward to the consumer, but it brings up the inflation on the corporation, right? Which means lower margins or margin contraction. Margin contraction, lower profits. And higher sales, ideally. Now they don't always get the sales back. That's part of that depends on how much market share they lose over time, right? AVGO to the moon. It's been awesome. I know. Did they beat earnings or some shit? Anyway, and so through this process, capitalism is is realized, right? You know, the corporation that's lean and can pivot and react to market prices quickly will pick up a larger portion of market share, while larger corporations that are lethargic and slow, right, and not focused on increasing market share, will cede market share to those more agile corporations, right? And this is how, you know, new companies move into the spotlight and old companies die off and all of that. But what's really important here for the macroeconomic situation is that if we see PPI is rising, right, really fast, but CPI is falling, then we know that corporations are starting to absorb those increased input costs, and they're no longer able to pass them on to the consumer without losing sales and market share, right? And since the market is forward looking, right, that indicates that margins for corporations are going to contract in the future because they are now less profitable and trying to achieve higher sales to regain market share that is lost. And that is where risk equities become less bullish, right? That is that pivotal moment. And I think we're getting close to it. We may not be there yet, but I think we're getting close to it. So something to think about. You know, this is an environment that could begin to start to benefit if you're a long-term investor. This is an environment that could begin to start to benefit smaller corporations with strong cash flows that are, you know, upwardly mobile, because they now, you know, in a time like this, could have the opportunity to take huge amounts of market share from major players in their sectors. QQQ's ripping because AVGO beat earnings, I'm assuming. It could be an opportunity for GME. I've outlined that in the past, that GME's balance sheet would benefit them in a market downturn. But I don't know how much interest they have in pursuing their legacy business model, so that really depends. GME could benefit from that scenario, but again, it depends on how much Cohen wants to pursue its current model, right? Like he could, you know, in a period of contraction like that, he could try to go after like Best Buy, right? And take market share from them, or, you know, Micro Center or whatever. But that's only if that's what he intends to pursue, right? And we have no fucking clue what Cohen wants to do. So, you know, it's a coin flip, right? Anyway, thank you guys so much for tuning in. Sorry I keep showing up late to the streams. I've been sick as fuck. I have a fever of like 102 right now. But I will try to see you in the morning if I can get out of my NyQuil stupor in time. Anyway, I hope everybody has a good night, and I'll see you later.